You're tuned in to Agriculture Today, and we start our Friday show with a grain market update with K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, starting off our conversation, what are futures looking like?
Well, we've got to the end of the month of July, and we haven't seen any droughts show up, or if there are concerns in some areas that are pretty wet, that hasn't come forth yet either. The markets are paying attention to crop ratings, and uh, and we'll talk more about this a little bit later on. But that's led us to the point where Dees corn closed on the last day of July, since that's we're going to use that as kind of our benchmark, closed on at below $4 at $3.99 3/4. And you know, these even numbers are psychological barriers, i.e. reference prices. So $3.99, these corns is a quote big deal. And also on the 31st, we closed November soybeans closed at 10.22 and a half, and of course we're in Kansas. We've harvested our hard red winter wheat crop, but overall, generally, we're just so for prices. We're really, what people are looking at now is probably any old crop sales that they have. You do have new crop price bids available for wheat. We'll talk about that in a minute. But September contract, lead contract 549, again right around 550. You're getting at USDA reference prices for wheat. I think that is 550. So that's basically where we're at right now. And it is interesting that now that we're done with this harvest, looking to the next July's harvest, the July 25 contract closed at 586 and a quarter. So it quote is as it is. And you know, diving a little bit deeper in the specifics of this, on that the trend for corn futures basically has since, in essence, late June, early July, we've moved below about 410, 415, and for that July contract, again closed on middle of the week, you know, somewhere 380, 385, something like that. So we're down from that situation. And the trend, as we talked about, trends in crop conditions, you have percent good to excellent, about 67, 68%, something like that. You know, really not showing any real problems yet. My only caveat to that would be in some extremely wet areas, Wisconsin, parts of northern Iowa, southern Minnesota, over to South Dakota, even some parts of Nebraska, at least as I look at the moisture maps. You know, if there's any damage to yield, that'll come from too much moisture, slower development. Well, I don't know that that's going to show up on with these crop ratings that we've got. That's just my own concern. So it does leave room for some type of a lower yield than these record high yields that are projected right now. And I know my good colleague Greg Ivandahl takes those crop yields, projects them. And my only question for Greg or anybody else using that type of technology is, are you projecting off a long-term yield trend, or are you looking at basically yields for about the last 10 years that haven't been above 177? They've been, when we've had good years, we've been pretty level. So that's the only caveat and question I have for Greg and others that do that. And so you've got that situation in corn. For grain sorghum, we're sideways to a little bit lower. Again, we're about 58% good to excellent. Of course, more grain sorghum's grown in some tougher areas. Well, in the Western Corn Belt, where we have had any situation that hasn't been as optimal, it's been there. And so here you got corn in some areas of the U.S. coming into dough stage. You know, we're about 35% dough, and still, if we have up and down weather issues in August, that you can still see problems there. But corn as it is, generally, here we've had some major AgriCon meetings of late, where AgriConists got together, talked about different issues that are relevant. And one one overall theme, and at least in the grain market side, is that we are not valuing any. We don't have any risk premium in these markets. Basically, we're seeing good crop condition ratings, and that especially as you use this kind of numbers oriented, quantified view of things, that AI trading, a more increased AI trading has brought. Hey, it says if it gets a signal that we've got good crop ratings and we've come through a certain time frame, then boom, we go right to that. We go right to that market outcome with high yields, and we aren't as likely to retain any yield risk yet. And I think it sure seems, anecdotally anyway, just observations in 1 year, that sure seems to be what's happening here. We just don't have any signals that there are those type of crop production problems. So when you look at soybeans, again, the crop ratings at for this year are at about, again, 67-68% good to excellent. You're as the as high as we've been in any year other than 2020. 2020 had great conditions, great conditions to start, then moved lower later on after we got through August. So we're entering August with soybeans in pretty good conditions, but we're about 79% of the way to blooming. This was earlier this week, basically Saturday, Sunday ratings came out. Setting pods about 45%, so it'll be 50% now, and just coming into the time frame for soybeans when if we don't have optimal weather, well, there'll be some issues. So that'll be something that the market's watching. But again, percent good to excellent, pretty high. Yield models projecting 52 bushels an acre, like the USDA's, the USDA's yield projection, which was early on, it was just a trend line. Well, now that's becoming what we're paying attention to, just like for corn at 181 bushels an acre. And so with all that, then for soybeans, we've seen the market from well, again, about late June on into mid-July, have had a one run up to about 1075 for September. Soybeans closed on Wednesday at about 1014.5. November new crop to close at 1039.5 on Wednesday, and again had been up to about $11 and have fallen off. So really kind of this universal symphony, I guess, and of a unanimous opinion that, hey, they're not going to value much risk in the markets, and so we find ourselves where we're at. If you'd like, we could talk about wheat at this moment if you want.
Go for it, Dan.
Okay, go for it. Thank you. Okay, so you look at the wheat markets. Of course, right now in Kansas, we are through with our wheat harvest, and if anybody still has wheat, it's a storage situation, and we had pretty good numbers, so there's a quantity out there. Exports that have been up and down here. We had 2 weeks ago great exports, just so moderate, if not bearish. This last one, basically around 10 million bushels. Need about 16 to meet the USDA's projection per week, and that's for the U.S. overall. And hard red, we'll see if the pace keeps up for hard red. We've had 1 or 2 good weeks. Of course, low prices help to encourage that too. So anyway, we're when you look at all these markets and see what the lows that they're putting in, and look at the measures of market momentum, like a relative strength index, which at 50% is neutral, 75% bullish, 25% bearish. All these futures basically are hanging around, had gotten up to about 35%, dropped off to about, they're at about 25% now, and it's a universal issue. So we're kind of bouncing along that bearish bottom and of the measures of momentum in the markets, and aren't really seeing any news to change things. I think going forward that we are not flying blind. We just don't have any numbers to actually measure yields yet out in the field. Of course, it's somewhat early, so it's really going to bring about a big premium for, yes, the August report for the August USDA report, and that'll be farmers giving an opinion on what they have in the field. So we'll be watching that. But we'll really watch the September, October, November reports. That's when the USDA, along with farmer opinions, will be considered. And at those, then we'll, by the time we get through September and especially October, we'll really have a better idea if we're really going to attain these tremendous yields that from a modeling point of view we're seeing, or if there are other factors at play.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you very much. Appreciate it, Shelby. Take care.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now, but we'll be right back.